Welcome, Namaskar. I'm Dilip Modi from Spice Money. Welcome to the Spice Money Chaupal, our fireside chat that we do every month and bring you very interesting conversations on platforms with fintech leaders from the ecosystem. Today is a very special day because we are celebrating National FinTech Week. We just celebrated the National FinTech Day, and we've got three amazing fintech leaders on this Spice Money Chaupal with us today. So with no further ado, I would like to welcome them all. We have Vineet from Jiraaf. Vineet, welcome. We have Anil from the Bureau, and we have Akshit from IndiaLends. We've all come together, as people working in the fintech ecosystem, very much committed to the theme of financial inclusion. Just before I start, just to recap on Spice Money. Spice Money is a deep rural fintech business, deeply committed to financial inclusion, building out a digital financial services platform with over 1 million merchants onboarded on our platform to deliver financial and digital services to consumers across semi-urban and rural India. Without further ado, can I start with you, Vineet? If you could please, just for our listeners and viewers, just give a quick introduction on your company and what you do, and your take on financial inclusion. Vineet, over to you.
Thank you, first of all, Dilip, for inviting us. It's a great week that we are celebrating the FinTech Week this week. So on the financial, first background about myself and Jiraaf. Jiraaf is basically trying to democratize the alternate investment space in India. What do we mean by that? Is that the last 2 decades, if you see for India, was the decade for equity space, where I would say today each and every Indian can trade in equity from their mobile phone, irrespective of where they are sitting. The same is not true if you look at the bond space or the alternate investment space. So that is what Jiraaf is trying to do. In next 1 decade or so, again, every Indian should be capable enough to invest and participate in these instruments which are today not available. So that's what Jiraaf is trying to do. The topic that of discussion today of financial inclusion that we have, I think fintech industry, in my view, impacts directly and indirectly to the financial inclusion ecosystem of India. Because if you take any other industry, be it e-commerce, be it food tech, be it mobility, at the core, it's the fintech which is basically, helping them do the transactions. So there is a direct impact from, things like UPI, payment gateways, digital lending. And there is also an indirect impact which the fintech as an industry is creating across the India, be it through, e-commerce, food deliveries, or, mobility, agri-tech. So, at the core, these, again, industries are operated on some or the other fintech ecosystem. So yes, I do believe that it's a great impact on the entire financial inclusion ecosystem, which our industry is creating.
I'll come back to you, Vineet, and we'll talk about this vision of diversifying the investment product portfolio. But let's just introduce everyone on the panel to the listeners, and then we'll have a discussion across. Anil, if I could come to you, if you could give a quick introduction on your company and your take on financial inclusion, Anil.
Yeah, Bureau is an identity orchestration platform, and we believe that having good customer experience and fighting fraud can go hand in hand. Traditionally, we've noticed that in the trade-off between fighting fraud and having friction, customers have been at the brunt of having more friction, which results in good customers dropping off. So we are empowering digital-first enterprises to fight fraud without hampering their customer experience. Bureau today caters to more than 100 customers across the BFSI space, gaming, matrimony, and e-commerce industries. And we have more than 20 million identities verified. So all this has happened within a span of 2 years. And so we are, again, a nascent company, but we believe that there is a large space that's growing where increasingly fraud can become more sophisticated, and therefore there is greater usage of technology that is required to effectively counter fraud. I've joined Bureau a couple of months ago, and I head the product strategy and risk management. Prior to this, I was at the RBI, where I used to inspect several cooperative banks in Maharashtra, and I was also instrumental in policy formulation. So I draw from that experience of understanding what are the customer pain points, how do frauds occur, and therefore how we can effectively counter them and provide those solutions that are critical to the industry to establish trust among the consumers.
Thanks, Anil. Akshit, if we could, have you introduce your company and your take on financial inclusion, Akshit.
Certainly, Dilip. I'm with IndiaLends. We are one of the largest marketplace platforms for financial products, primarily on the lending side in the country. We have presently over 13 million users, more than 65 lending partners with us. In fact, a large part of our target segment is actually near prime and new to credit. In fact, in the context of fintech, we've been able to one of the players to most successfully leverage technology. And in fact, in our industry, we are the most efficient marketplace players, with 60 to 65% of our loans, card outs, etc., happening without any human intervention, which is fully digitally. And that also makes us the most operationally efficient players in terms of our unit economics as well. As far as financial inclusion is concerned, I think if you look at especially lending, right, you're talking about acquisition, you're talking about underwriting, you're talking about collections. And I think if you have to throw light on how technology is being leveraged to be able to be more effective across all three areas to achieve better success in our goal of financial inclusion, I think it's a very detailed conversation we can have.
So Akshit, let's just continue with what you just said. We also noticed that a majority of your customers are millennials, right? Would that be correct?
A good portion of them. That's right.
A good portion are millennials, right? So you mentioned about acquisition, underwriting, and collections, right, as the main part of the value chain for lending, Akshit.
Yeah.
So when you think about financial inclusion, Akshit, and new to credit customers, right? Of course, the regulator came out with new banking licenses, Akshit, as we all know, the payment bank, the small finance bank. They've, of course, been talking about the PPI license to move traffic from UPI to PPI. There have been recent guidelines on digital lending where they've been concerned about synthetic risk and other structures. But keeping all of that in mind, Akshit, how are you seeing, how do you see informal lending moving to formal lending, right? When we look at financial inclusion, the idea is that, how do you bring more and more new to credit customers on board? And, what are some of the bottlenecks you're seeing today in this as a leading platform for lenders to come and borrowers to come together? What are some of the bottlenecks and challenges you're finding, right, in terms of significant part of the country still relying on informal sources of lending? How do we bring them into the formal financial fold? What are some of the challenges, and how do you see technology solving for it?
Yeah, so I think, Dilip, it's almost now been between 8 to 10 years that we've actually seen a lot of NBFCs which have been looking at lending from very micro to mid-size enterprises, and even on the consumer side, pretty much addressing the same problem statement with the use of technology, right? And I believe for all the players, the starting point needs to come from what is your risk understanding of the consumer, and hence what is the underwriting capabilities you are able to build to be able to provide a loan within certain IRRs. Now, the challenge traditionally that has been in the all-informal setup has been exorbitant amount of IRRs or the APRs that the borrowers had to pay, right? Which if you convert into IRR terms, it goes to 400, 500, 700%. And the borrower does not even realize. And hence, when a new age fintech player comes there, he needs to be able to understand, can I control the NPS at a portfolio level of, let's say, 5%? Be able to lend, and hence that then at an IRR of plus minus 30% to be able to achieve financial inclusion along with viability for the consumer without putting them into a debt trap, and make a viable business case for the entity itself. I believe a strong understanding over there is extremely important, and even at that layer, technology today has is actually playing a pivotal role. So there was a time where you had to purely rely on your assessment as to what would be, let's say if you take a micro SME, micro entrepreneur or a micro business into perspective, right? You will have to rely on judgment and assessment as to what kind of business this potential borrower would be doing. But today, because of adoption of tools like UPI payments itself, there is so much of data which is available in digital domain, which acts as a feeder for your better risk assessment. And hence, it provides that further needed impetus and encourages players like us to go out in the market and serve this underserved and otherwise in the informal market exploited segment. Point number one. And I think from there, that being the starting point, you then solve for the challenge of acquisition. Because for a lot of players, being able to be on the ground, feet on street, go and acquire a customer at a certain cost has also been a challenge, which also is now starting to get addressed. Because one, you also, other than fintech, you've had commerce models that are servicing these MSME borrowers. They are providing other value-added service like commerce, value chain, etc., etc. So you go actually as a starting point and partner them until you have been able to figure out what is the right business model for you at a much lower acquisition cost. And at some point in time, then you build your own feet on street with the right kind of economics, etc., etc. Then comes the collections part. Now, if you've actually sorted out your underwriting part reasonably successfully, you're putting less pressure on yourself to be able to execute successful execution with respect to collections. And the reason this is important is because with micro borrowers, if you're building a large portfolio, then you have a very large base. Even if you're at a portfolio value, the NPA ratio is contained at less than 5%. The number of borrowers that you need to be able to collect is fairly large. Now there again, a lot of models have started coming in. One, of course, with ENACH, etc., coming in, the overall bounce rates have significantly reduced. Point number one. And then, when I spoke about acquisition via partnerships, that was also helped in lower NPLs, because a lot of time you are actually directly financing commerce, which is the working capital with respect to a certain trade. So fintech players, along with innovations that have come from either RBI, NPCI, and non-fintech models which are catering to the similar segment put together, have significantly progressed towards solving these challenges.
So Akshit, from what you're saying, basically the idea is that how does the micro enterprise get digitized?
Yeah.
Be able to generate digital data,
yeah,
which can then be used for underwriting. Right. And then, because as part of that digitization, there could be commerce that could happen digitally. You could have embedded financial solutions within commerce, right?
Absolutely.
That's what. So, Akshit, in your own journey so far, are you seeing a lot of micro enterprises, going digital, and do you see like ONDC and Okin or these new platforms that are coming up, accelerating that journey of micro enterprises in small towns going digital, and therefore getting into this whole financial inclusion world?
Yeah, no, it's definitely happening, right? I mean, demonetization to that extent has been a blessing in disguise, because there was no choice momentarily left until things were solved for with respect to currency, etc., to be able to accept digital payments. And I actually remember I was on a vacation in actually a tier 4 city when the demonetization was announced. And there could have been no other way to actually ensure a very quick adoption. And then if you actually end up looking at the trends of cashless commerce, it dipped maybe for some time after the initial spike of demonetization. But now it's constantly increasing, because even the micro entrepreneurs who otherwise felt that, do I have to be worried if, my books of accounts are in a domain which can be accessed. I'm stopping to cash trade. But the taxation structure also has ensured that they don't have to fear, because most of these guys would not come into tax slabs. Even GST is applicable for beyond 20 lakhs annual revenue or 40 lakhs, depending on the kind of enterprise you are. So those worries and that education that has actually been done by a lot of players also have helped a constantly increased digital adoption. Now, because these micro entrepreneurs have tasted that blood, that it actually works to their advantage. यार पेटीएम से पैसा आ जाएगा, क्या फर्क पड़ता है? Now when you go to them, that there is a platform like ONDC available. If you come over there, you will actually be able to sell your product to somebody 15 kilometers away also, because the consumer can parallelly book a Dunzo, which is a delivery platform on ONDC. It's a no-brainer for him, because he's not worried whether money is going to come into his galla, which is the drawer, or into his bank account. With that worry apart, who doesn't want to do more business? And I believe steps like ONDC, etc., are amazing steps for the industry, and more particularly to achieve financial inclusion.
Amazing. So Anil, let me come to you, right? With what Akshit spoke about, right? This whole digitization of the lending value chain and being able to lend on the back of it. Anil, what's been your experience both when you were working with the regulator, but now at the bureau, right? With focusing on fraud and identity, verification. That what are the inherent risks when we are dealing with kind of a contactless digital world, right? Where you're looking at data and not the person, right? And you're relying on data to do lending, right? What are some of the challenges, and how do we overcome those challenges when it comes to fraud and risk management?
Yeah, that's a great question, Dilip. And as Akshit said, so again, if we start at the point of acquisition, somebody logs in. Let's say I'm trying to log on to IndiaLends platform. I want to secure a loan for my enterprise. Right? So the first question that IndiaLends has to answer before it gets to the stage of underwriting is, am I who I claim to be? And is the information provided by me accurate? Right? Am I being honest, or am I trying to deceive the platform in trying to secure some money that I am not entitled to, not worthy of, right? And this is where we have seen that there are many insights, even starting with your, let's say mobile number, that can help businesses understand who the persona is, the person who is interacting in their digital form, and what transactions they've made, for how many, let's say, months or years they've had the right mobile number, the email ID. So wherever there is a digital footprint, right, that adds to the trust or credibility of the user, and therefore that reduces the risk to that extent. And again, with GST, with EPFO, with various other databases, there is a host of data that can be assessed and verified in real time that can help in better underwriting. But beyond that, if you look at, let's say, a B2C platform where they are catering to thousands or millions of customers, they have to look at different stages, not just at the onboarding level, and again, not purely from a compliance check where you do the bare minimum KYC to please the regulator, but also it's a prudent measure to tackle risk at your own end. And therefore, you need to also have those robust safeguards at the onboarding stage. And that's where companies like Bureau help in giving those signals which enable them to have a smooth journey for the good customers, whereas those who raise certain red flags will need additional checks before they are let through. So ironically, what we've discovered is that it's usually the fraudsters who can jump all the hoops that organizations place, whereas the good customers tend to drop off. So this delicate balance needs to be placed in order to allow for growth while containing fraud. So, and this is not just restricted to the onboarding. We have seen that during authentication, especially for gaming companies, there is a lot of promo abuse that happens. There is player collusion that happens. So in one of the companies that we work with, we have been successful in reducing promo abuse by about 95%, in reducing fraud by about 27%, because we have coupled traditional metrics with behavioral biometrics. Right? And now, for example, let's say Spice Money or any other players who are dealing with the Aadhaar-enabled payment systems, they've witnessed an increase in AEPS fraud due to cloning of fingerprints. Right? So there are always challenges in this value chain, and there is increasing sophistication that organizations have to tackle and cope with. So Bureau, with its full suite of products, which are to do with onboarding, intelligence related to your phone, email, device, and also the behavioral biometrics, not just the physical biometrics, because we know that they are vulnerable, can nearly eliminate fraud in all these respects. So now coming back to the second, part of your question of, how frauds usually occur, what are the risks that are involved in lending. While I was at the RBI, what we noticed was, as long as it was a, paper-driven process and document, and some of the legacy institutions would still follow, there would be greater propensity to commit, and also for the institutions to fall prey to such instances. Even if we look at the recent RBI annual report, the largest chunk of fraud comes from loan related. Right? So either the property is not in possession that you claim to have, right? Which could be a main source of delinquency and also recovery hassles that banks would undergo. Right? There would be diversion of funds, siphoning to entities which exist only on paper. So in this, technology can be a game changer. Right? And if we talk about the retail front, where there have been victims, it's mostly due to low financial literacy, and there have been victims of phishing or other forms. So in that case, the banks, fintechs, everyone else who is part of the ecosystem, along with the government and the regulators, need to enhance awareness about financial literacy. We've seen that happening, but that needs to step up in order to ensure that people don't need to fall prey to this fear and greed that fraudsters usually prey on.
Anil, you touched on a very interesting point of financial literacy, right? And, as we think about financial inclusion, financial literacy and digital literacy also need to be focused on, right? Because we are saying digital can drive inclusion, but at the same time, you need financial literacy, right? Because fraud can also be created because of lack of both digital and financial literacy, right? So Vineet, if I could just come to you on this point of financial literacy, right? Because you're talking about, building out an alternate investment kind of a thesis, right? And if we look at, Bharat, we look at semi-urban, we look at rural India, people are used to investing in traditional instruments, right? Land, gold, what they understand, what they can touch and feel, what they can experience, right? I know that some players experimented with digital gold, and while it could work with urban, we don't know how well it could go in rural, right? So the question is, how do you assess gold, right? When there aren't enough branches to do it. Yeah. So we've seen, of course, that a lot of savings go in just cash, right? Yeah. And people do not end up investing in this into financial products, right? How as a firm, is dedicated to alternate investment products, Vineet, do you tackle this challenge of financial literacy?
Yeah, so see, we tackle this challenge almost on a daily basis, if I have to put that, because it's a new product. So even if I have to, talk about urban people, it takes some time to explain them what this product is. Okay, even if I have to take, say, people on this call today, maybe I'll need to, explain for 5 minutes what exactly we do. But that is the, if we go back to history of India, so that has been the trend for all the financial products. So if you go back to, say, when equity market started, say, in 90s, okay, the only people who would be investing in those markets would be these financially literate people who are close to the stock market, or maybe people in Bombay, maybe people in Calcutta. During those days, they used to primarily invest. But with time, what has happened was that product became a mainstream product. Same thing happened with mutual fund as an industry. When it started, say in 2000s, it was a exotic product. Okay, people did not understand how it works, how 5 shares can come together and you get a unit value, right? But then Amphi did a good job there. Okay, so after a decade, it became a mainstream product. Say after, I would say 2010 onwards, it started becoming a mainstream product. Today, anybody who is earning even at 20,000 rupees has started doing 500 rupees SIP. The person might not still understand how mutual fund works, but because he knows that I need to do SIP, they have started doing it. Okay, so at least that barrier has people have moved over that barrier and they've started trusting product. So now, as an alternate investment platform, we understand that we also have to go through that journey. Okay, so if I talk about India as a country, yes, there are a lot of people who understand this product. Now, what has helped us is that in last 2 or 3 years, again, tech has played a very, very big differentiator. Today, people have all the information available at the click of a button. So the time that they take to understand has reduced substantially. Okay, so if we would be, say, explaining alternate investment in 2010, it would have taken us maybe 5 years to explain the market. Today it is taking maybe less than 30, because they do their homework. A lot of content is available already, so that has helped us explaining people about the product. But I'll give you an example. What we have seen in our short journey, though we are a 1-year-old company, we have around, say, 20,000 investors who are registered on our platform. But what we have seen is that there are people from a remote village in Rajasthan who has invested in our product. We have also seen somebody who is sitting in Sikkim and has invested in our product. Okay, so now it means that irrespective of their location, if they are at least literate, I would not talk about illiterate class as of now, but at least if they have gone to school and have basic understanding of how loan and etc. works, we have seen people from tier 3, tier 4, tier 5 cities investing in these products. Majority, yes, majority investors would be from tier 1 and tier 2 cities. But now these examples, it is like green shoots. Okay, where say if after 3 or 4 years we talk, I believe that there will be a lot of people who will understand what a platform is.
So actually, it's very interesting just listening to the three of you. If I was to imagine a digital bank, right? On one hand, you have people who are digitally onboarding themselves and investing. On the other hand, you have people digitally onboarding themselves and borrowing. And then you have companies like Bureau ensuring that we can manage fraud, right? While all of this is happening both from an onboarding as well as from a risk management point of view. But let me ask you this, right? When you talk about rural India, and we at Spice Money, are working very much in rural India. The regulator, when they thought of financial inclusion initially, there was this concept of a BC network, right? A business correspondent network. And you saw large PSU banks roll out a lot of BCs whose job was really to open BC branches in small towns and rural India to make formal financial products available over there. Now that has gone quite far, but now with digitization, there is an opportunity for fintech BCs, right? These digital BC networks, to also reach out. And one of our theses at Spice Money has been that, you need assisted digital networks as well, right? But with assisted digital networks, the challenge is you have technology, but also a human interface, right? In your experience, right, Anil, from a fraud point of view, Akshit from a lending point of view, Vineet from an investments point of view, as we think about going from 300 million people accessing formal financial products to 1.3 billion people accessing formal financial products, do you think we need a new model, right, which is not just 100% digital do-it-yourself, but a combination of assistance and digital? And you see a new model that needs to be created to drive financial inclusion, and reach out to 1 billion people, while solving for financial literacy. So maybe, Akshit, can I come back to you on this? How do you see 300 million going to 1.3 billion, being able to lend on your being able to borrow from your platform, right? And do you see the market growing? And what are some of the things we'll have to do? And would assistance necessarily be needed, or it can be done without?
No, I think it's a very interesting journey that one has to tactically follow, right? Now, let's say if you would have asked this question 10 years back for a typical urban population, answer would have been it needs to be a phygital or an assisted journey. But today, that audience does not need assistance. It is equipped to understand there's tech available, there's research available, they are used to, they don't have the time to interact with somebody, they need the product to be self-explanatory, etc. Right? But the moment you look at more tier 3, tier 4 rural population, at this point in time, today you do need a phygital capability. Digital capability to be able to seamlessly process. So for example, at IndiaLends, if we were to do API integrations with Spice Money, your merchant today will be able to very seamlessly actually onboard a loan application for your customer. But the customer would not understand everything about the loan. And that is where your merchant, who is your touch point, will play a very essential role. And that is where financial literacy and education also will come into, right? But I hope so that after every decade, we will see that the need for assistance keeps on reducing. And hence, we will also have to be proactive in pivoting the business models accordingly. That's my view.
That's where when it comes to youth, right, who are more digitally native,
yeah.
Right? One of our experience has been working in Bharat that a lot of the rural youth have come onto our platforms and are using it to deliver financial services. Okay. And maybe Akshit, as rural India, these digitally native youth sitting in rural India start adopting these platforms for themselves, yes, in terms of applying for loans, yeah, or doing formal investments. Maybe they could be the early adopters.
Absolutely.
So what you're saying, Akshit, is that maybe like it happened earlier, it starts with assistance, but over time, people get comfortable, and as literacy grows, they start doing it themselves. So the model evolves, and eventually the idea is to empower the customer to do it themselves on a digital platform, right?
Absolutely. And that's a win-win for everybody, essentially.
So if I was to ask you, so Akshit, if I was to kind of ask you, what would be your vision, right? Like, how do you see a situation where, 1 billion consumers will be, coming online and applying for loans?
I'm reasonably sure that it's not more than a decade or decade and a half away to be able to reach those kind of volumes, right? Because you already have close to 1 billion people who are in some way or the other digitally connected. Now it's about now the breadth is already there. What is happening is now slowly and steadily the depth is increasing. And as the depth increases, and how is the depth increasing, right? There are some small but interesting initiatives. When you launch a product for the rural market, don't launch it in a hi-fi English. Make it vernacular. That itself acts as a very essential trigger point for the customer to interact with your product digitally, should he have access. But if it was a good app in English, it possibly becomes a data. Similarly, there are so many initiatives which are in place.
And do you see enough lenders having appetite, Akshit, to be able to underwrite backed on digital data?
There are. See, what has happened, as I mentioned earlier as well, in the last 8 to 10 years, there are a lot of NBFCs that have emerged who are wanting to cater to the MSME segment, and more are coming from the micro side as well, right? So we are already seeing a lot of lenders interested in addressing that population. I have myself interacted in the last 6 months with 3 new players who are looking at lending to micro entrepreneurs, and all of them have actually raised a Series A and beyond funding within the 6 months itself. So I think it's a space which everybody is watching out for. It is slowly, steadily, I believe, already starting to move from a blue ocean to a red ocean. So I think all of us are watching this space. A lot of players want to be in this space, and hence a lot of corollary capabilities are also being developed to enable successful players on the lending front to be able to address either on the consumer lending side the rural population or even on the MSME side.
And you mentioned about NPAs within 5%, right? Is there enough data now coming out where NPAs are in control as people are lending backed on digital data?
See, there is, right? One, it is about how you want to do business, point number one. So today, if let's say a very, very micro or consumer absolutely in rural on the consumer lending side has not been exposed to lending industry as a whole. And if you want to go there and lend to 500,000 consumers within the first 6 months, you'll face a challenge, right? So idea is to start conservatively for the first 6 months. Be sure that, okay, I may not be generating the best returns over here from an IRR perspective because these are relatively low risk customers, but the data that I receive from the NPS that I generate, which will be more controlled, will act as a feeder for me to take more risk from these consumers after 6 months. So I think this applies not just to consumers in the rural space, but even businesses that started lending to consumers in the urban setting as well, which also is classified as financial inclusion because banks were not lending to them. And then NBFCs came with their new age thinking, certain appetite to be able to build and certain capabilities to be able to build a viable model. So I think if you are tactical to execute your business model sensibly, in fact, you will do a lot of good to the industry as well, because there'll be more investor interest, there'll be more players. But I think if you end up having a couple of players who start doing it in a very bizarre manner, then it will be very detrimental.
And Vineet, what's your vision, right? How do you see 1 billion people investing in non-traditional products going forward? Do you see that happening online, or do you think assistance would be needed? Akshit believes it's a decade away where everyone will come online to borrow. Do you see a similar timeline where everyone will come online to invest?
See, what we have seen is that COVID really accelerated the usage of tech to the remotest of the places, if I have to put. Mobile penetration, internet penetration has really again changed a lot of game in India. So even if I talk about my platform today, our entire journey for any individual is only through tech. There is no digital, there is no human touch. Be it registration, be it KYC, be it Aadhaar verification, be it investment, managing your investment returns, etc. So yes, I do believe that in next decade or so, I believe that even the last person in the country, in some way or fashion, is already using a mobile cell phone, right? It is now about that financial literacy and the confidence of investing. I don't believe that maybe in a decade or so entire 1.3 billion people will start investing, okay, because that has not happened for equity as we speak. Okay, so for a newer product, obviously it will take time, but yes, the speed at which it will happen will be faster than for all other financial products that has been done historically. Okay, so suppose equity took 20 years to reach where they are, we will take 10 years. A new product which will come after a decade will take 2 years to do that. So, but yes, as a country, I do believe that India is taking a lot of right steps. UPI is a game changer. A lot of our investments on our platform happens through UPI. It takes less than 30 seconds for people to actually invest. So now these are the steps, if played well by the government, by the industry, I don't see, we not reaching at that stage.
Well, it's so exciting listening to all of you because this is exactly what the regulator has been talking about, how fintechs and banks can work together to drive the inclusion theme in the country. And, as leaders in this space, it's very heartening to see how you believe that, fintech can truly drive inclusion, and not just in terms of, lending, but also helping diversify the investment portfolio for consumers deep in semi-urban and rural India. I'm sure, Anil, you'll agree with me that, I know you're a global company, right? But, with the kind of use cases which are coming up in India, you'll end up creating a lot of intellectual property, around fraud and risk management that you can take to the rest of your markets as well. And one of the things that India has shown to the world with UPI is that we can truly be a fintech leader in the emerging world. What Africa has been in the space of mobile wallets, we can definitely drive in the space of digital banking, going forward. So I'd like to maybe just close by each of you saying that, if there's one, kind of dream that you have, when you think about fintech in India, what's that dream? And, how do you see that dream coming alive in India? So Akshit, what's your dream for the fintech space in India?
So my dream is if one, starting with fintech doing all the right things in the conduct of business. My dream is RBI actually giving the same respect to fintechs that banks get today.
Wonderful, wonderful. Anil, do you have the same dream coming from the regulator?
Yeah, largely same, but of course, I don't think it's a question of respect. It's more about understanding the regulatory space, how the regulator envisages, and also putting the customer first at the center of everything that fintechs are endeavoring to do, solving fundamental problems of affordability, of access, of convenience, which takes primacy over all the other initiatives that they've taken. So my dream would be to see that as Akshit and Vineet have spoken, people have access, they feel secure. Today, a large chunk of, let's say, the elderly people, people who are somewhat financially less literate, even otherwise less literate, are apprehensive. So we foster that trust among everyone to access digital payments, investments, and products related to financial services in a secure manner, and obviate the need for physical branches and visits, which are ineffective and time consuming.
Thanks, Anil. Vineet?
I truly believe that fintech is the only industry wherein India could lead the world, or is better than any other country in the world. If I just compare it with other verticals, traditionally we have been told that we generally copy the Western models, okay, which is in case of e-commerce, or in case of food tech, or in case of delivery, in case of mobility. But in fintech, we have numerous examples where we have really innovated something which has come out of the country. You mentioned UPI. Nobody has seen something like UPI across the world. In case of digital lending, again, there are a lot of products which are being innovated, which is first time in the world. So I truly believe that for India to become the biggest economy in the world in next decade or so, fintech will be a pivotal role that we play, and that's what I want to see.
Yeah, thank you so much, Vineet. I truly believe, like all of you, that India FinTech is a true model of public-private partnership, leveraging technology to drive inclusion. And I think if you look at India, UPI is a great example of a public good infrastructure working with private sector to drive growth of digital payments in India. And I'm sure that this model of public-private partnership, leveraging technology, is a model that can be replicated around the world. So thank you so much, Akshit, Anil, Vineet, for taking time out to join us at the Spice Money Chaupal. I think, as we celebrate the National FinTech Week, I know that leaders like yourselves will continue to drive the inclusion theme in the country and fulfill the regulator's dream of ensuring that 1.3 billion people can get access to formal financial services, as Akshit said, within the next decade, or even earlier, who knows. So with that, thank you so much. And I wish you all the very best, in your endeavors, and let's all work together to make this dream come true. Thank you.
Thank you, Dilip.
Thank you, Dilip.
Bye.